Hello everyone, and welcome back to the Investment Diary. I'm your host, and today we're turning our spotlight on one of the biggest tech events of the summer, Figma's IPO. That's right, the cloud-based design and collaboration platform you've probably heard every product team talking about just went public. In this video, we'll unpack everything from Figma's origins, market position, and product strategy to the nitty-gritty of their financial performance, balance sheet, strength, IPO, pricing, and what could go right or wrong this journey. So grab your coffee, settle in, and let's dive deep into Figma. If you're getting value from this video, please subscribe to the channel. We just passed 50 subscribers, so a huge thank you to everyone who's followed the Investment Diary. Now, let's dive into it. Let's start at the beginning. Figma was founded in 2012 by Dylan Field and Evan Wallace in San Francisco, with a simple but powerful mission: make design collaboration as seamless as Google Docs makes writing. Over the years, Figma has expanded far beyond its original vector design editor. Today, it offers a suite of interconnected tools: Figma Design, the bread and butter web-based vector editor for UI/UX, FIGM, a virtual whiteboard for brainstorming, workshops, and real-time ideation, Dev Mode, a space where developers grab specs, assets, and code snippets directly from designs, Figma Sites, launched recently, enabling designers to publish static websites without code, AI-powered features, Figma Make for generative design prompts, Buzz for AI-assisted feedback, and Draw for Sketch-to-Vector magic. This integrated ecosystem means teams no longer juggle multiple tools for wireframes, mockups, and prototypes. Everything lives in one shared file in the browser, and that vision of design as a team sport has paid off in a big way. Figma's user growth has been nothing short of Today they boast roughly 30 million monthly active users. An astonishing 95% of Fortune 500 companies use Figma in some capacity. Names like Netflix, Stripe, Servicino, SAP, Workday, and Duolingo are on the roster. But smaller startups have also embraced the platform, fueling grassroots viral adoption across organizations. The magic sauce here is Figma's freemium model. Any designer can sign up and start designing for free. As projects grow and teams add more seats, companies convert to paid plans. That bottom-up adoption strategy has created incredibly sticky usage patterns. 76% of customers leverage 2 or more Figma products every month, driving up wallet share without heavy outbound sales. Of course, Figma doesn't operate in a vacuum. Their biggest competitor is Adobe's Creative Cloud, particularly Adobe XD and Illustrator. Then there's Canva, for more casual design, and niche tools for prototyping and Yet Figma's real-time collaboration and browsing-native approach have set it apart. Designers and non-designers alike can jump into the same file and code it without version conflicts. That collaborative edge has created a loyal community. Figma meetups, plugin marketplaces, and design schools all rally around the platform. But competition is heating up. Adobe is integrating AI into Photoshop and Illustrator. Canva is rolling out team collaboration features, and startups are experimenting with generative AI design. Figma's challenge will be to keep innovating, hence the heavy investment in AI features and continuous product extensions. Now let's switch gears to Figma's financial story. In fiscal year 2024, they generated $749 million in revenue, a robust 48% increase from the previous year's $505 million. That kind of top-line growth puts them among the fastest-scaling SaaS companies out there. However, Figma did report a net loss of approximately $732 million in 2024. Before you panic, that loss was largely a one-time stock-based compensation charge tied to the canceled Adobe acquisition. Strip out that non-cash expense, and Figma's core business is much closer to break. Dig a bit deeper, and you'll see their gross margin remains sky-high at around 91%, which is standard for cloud-based software. This means for every dollar of revenue, roughly 91 cents flows past direct costs into the gross profit line, a critical advantage in the SaaS model. Fast forward to Q1 2025, and Figma is showing real signs of profitability. They reported $228.2 million in revenue, up 46% year. More impressively, they posted net income of $44.9 million, a high-growth SaaS business, into a profitable one in just a few quarters. Their operating margin for Q1 was roughly 17%, reflecting disciplined spending on R&D and go-to-market while still capturing significant growth. And remember the rule of 40? It's a rule of thumb for SaaS companies where growth rate plus profitability margin should exceed 40. Figma's score stands at about 63, well above that benchmark. That tells us Figma isn't sacrificing efficiency for growth. They're doing both at a best-in-class level. Beyond revenue and profit, there are 3 key SaaS metrics every investor watches. 1. Dollar retention. Figma's NDR sits around 132 to 134%. That means existing customers are expanding their spending by more than 30% each year, upgrading seats, adopting premium plans, or adding new features. 2. Gross retention. At roughly 96% for large enterprise accounts, Figma is losing very few high-value customers. 3. Customer cohorts. As of March 31, 2025, Figma had about 11,100 customers paying over $10,000 in annual recurring revenue, and 1,031 customers over $100,000 in ARR. 2.3 increase in just 2 years. These metrics show the stickiness and monetization power of the platform. When customers love a tool, they stick around and spend more over time, powering sustainable growth. Now let's talk balance sheet. Figma went public with over $1.5 billion in cash and zero debt, giving them significant runway to invest in product, marketing, and potential acquisitions. They've already shown a penchant for thinking differently. Figma holds about $70 million in Bitcoin through an ETF and plans to allocate another $30 million. This crypto treasury strategy is unconventional for a SaaS company, but underscores their willingness to leverage new financial instruments to enhance returns on idle cash. All right, on to the centerpiece. The IPO itself. Figma priced its shares at $33 per share, well above its marketing range of $30-32. That strong pricing reflected robust investor demand and confidence in the growth story. In total, Figma issued 36,937,080 Class A shares, raising about $1.22 billion. Of that, approximately $411.7 million went to Figma to fund growth, while $807.3 million went to early investors and employees selling shares, with roughly 585 million fully diluted shares outstanding after the IPO. The listing gave Figma a market capitalization of about $19.3 billion. That's a significant step up from the earlier valuation talk of $12.90, $13 billion. Underscoring that investors were eager to get in at launch. At a $19.3 billion valuation and forward ARR, estimated around $1 billion plus, post-Q1. Figma's implied revenue multiple sits between 19 to 21. While that multiple is rich compared to older generation SaaS names, it's in line with high growth. High retention, leaders and investors apparently believe Figma can continue winning in the $10 gives. $100 billion. Digital design market. No investment is risk-free, so let's highlight some key headlines. AI disruption. When generative AI tools could democratize design even further, lowering barriers to entry for new competitors or even prompting big tech to build Figma-like features into their own ecosystems. International exposure. Roughly 80% of Figma's revenue comes from outside the US, exposing them to currency fluctuations, geopolitical tensions, and slower growth in some regions. Talent constraints. As a global tech company, Figma relies heavily on top design and engineering talent. Immigration restrictions could hamper hiring in key markets. On the flip side, several catalysts could drive further upside. 1. AI-first enhancements. Continued rollout of AI design assistants could deepen engagement and unlock new use cases from code generation to fully automated prototyping. 2. Platform extensions. Figma sites, developer and potential M&A in adjacent markets could broaden the addressable market. 3. Enterprise upsell. With only 1,000 plus customers above $100,000 are today, there's room to grow enterprise penetration and upsell more customers into higher tier plans. So where does that leave us? Figma's IPO combined robust growth, best-in-class SaaS metrics, and real-time profitability, all hallmarks of a top-tier software company. The strong pricing and oversubscription signal healthy investor appetite, but given the valuation, investors need to watch execution closely. Adoption of new AI features, international growth, consistency, and retention as competition intensifies. In the coming weeks, I'll be monitoring Figma's trading patterns, Q2 financial results, and any updates on their product roadmap. If you decide to add Fig to your watch list or portfolio, focus on customer expansion metrics and integration of AI. That wraps up our deep dive into Figma's IPO. What do you think? Are you bullish on Fig's future as a public company, or do you see the valuation as full? Drop your thoughts in the comments below. If you enjoyed this analysis, hit that like button, subscribe for more investment deep dives, and ring the bell to stay updated on our latest videos. Thanks for watching the Investment Diary. See you next time.